Welcome back to the garage, everybody. It's Tuesday night, and this is your nightly market recap, the place where we break the markets down so simple, so clear, that everyone understands exactly what crypto and Wall Street are doing. Whether you write code, trim lawns, turn wrenches, or you're brand new to all this, you are in the right place. Tonight, the market looks calm on the surface, but underneath, nothing is calm. Bitcoin is tightening into a coil. Liquidity is moving in places retail never sees. Supply on key chains is disappearing faster than the headlines admit. And AI is reshaping global finance faster than the traditional markets know how to price in. This show exists because you deserve the truth without filters, without noise, and without the confusion that everyone else seems to spread. Here we talk about what's actually happening behind the scenes and what matters in the next 72 hours. And let's be honest, we all know why you're really here. You want to know if Triple X is living up to his name? So make sure you smash the like, hit the follow, and share this with your fellow Deegans, and especially that one buddy from work who swears Bitcoin is a joke and still can't figure out why it keeps coming back stronger. All right, let's get into the show. This is a holiday week. Thanksgiving is Thursday. TradFi desks leave early, half the market goes on autopilot, and liquidity thins out faster than a meme coin after launch day. Every year this week becomes the same thing, a low-volume battlefield where even small orders bend the market. That's what makes this week dangerous, and that's what makes this week opportunistic, because when liquidity is thin, price reacts harder, faster, and more dramatically to hedges, flows, and big pockets moving around. And this week, we've got a monster sitting at the end of it. Friday's massive Bitcoin options expiration, 150,000 plus BTC worth of options, over $13 billion in notional value, heavy positioning sitting at $80,000, max pain all the way up around $102,000. That spread alone tells you the market this week is a loaded spring. Every uptick or downtick sets off hedging. Market makers are adjusting their books like surgeons. And with everyone distracted by Turkey and travel, those hedging flows hit twice as hard. So Bitcoin going flat today, that wasn't weakness, that was coiling. That was the market saving energy for when the volume dries and the hedges start pulling price around like a rope. Now layer this in, Texas isn't waiting around. Texas officially adding Bitcoin to state reserves is not a headline. It's a declaration. A US state publicly saying we're holding Bitcoin because the dollar isn't enough. That changes things, not today's price, but the entire long-term structure of how governments allocate. It means Bitcoin is migrating from a speculative asset to a sovereign grade asset, and that scares the traditional system more than any CPI print. But here's the twist. Wall Street won't price this yet, not during Thanksgiving week, not while they're flying home, not while Friday expiration is breathing down their neck. And that's why tonight feels strange. The surface looks calm, the charts look slow, but underneath, the foundation is shifting. Bitcoin holding tight, liquidity moving in the shadows, Solana taking the rotation baton, Ethereum losing attention, supply tightening across the board, AI rewriting global finance, Texas validating Bitcoin on a government level, and a holiday week about to squeeze liquidity into a funnel right as a $13 billion expiry hits. This is not a sleepy week. This is a fuse week. And if you understand that, you understand why the next move, whenever it comes, will not be small. Let's move to the next gear. And here's where we drop the bullshit and tell you what's actually going on. Because the way the industry explains it, the average guy doesn't stand a chance. None of what's happening this week is random. None of it is accidental. And none of it is visible unless you know where to look. On-chain right now is screaming one message. The big players are getting their hands on supply before the next move. Full stop. I'm not going to sugarcoat it. Bitcoin on exchanges is disappearing, not drifting, disappearing. Every time BTC dips into the low zones, someone with deep pockets scoops it like they're buying a house in cash. You've got whales moving thousands of Bitcoin off exchanges. You've got miners cutting back, selling, almost like they expect a better price soon. You've got old wallets waking up for the first time in years, not to sell, but to accumulate. Why would someone who's been asleep since 2018 suddenly buy? Because they know what comes next. And this is the part nobody tells retail. When the supply on exchanges gets this low, the price doesn't just move, it snaps. Meanwhile, let's talk about chains like XRP and Solana, because what's happening there? The normal guy has no clue. He thinks it's random green candles. It's not. XRP supply on exchanges is getting obliterated. Years worth of liquidity, gone. OTC desks, the private markets where big institutions buy, they're running dry. So when the time comes and they need size, where do they get it? They don't. They pay up. That's how supply squeezes work. And that's exactly what the charts are showing, if you know how to read them. And Solana, that chain isn't pumping because of memes. It's pumping because serious money is moving onto it. Wallets exploding, volume exploding, bridges active, capital rotating, institutional order flow. Yes, real institutional money is moving over. This is what the fuck is actually happening. Smart money is positioning. Retail is confused. Analysts are guessing. Whales are accumulating. And the market is coiling for a real move. You will not hear this on TV. You will not hear this from a bank. You will not hear this from Twitter influencers posting rocket emojis. This is the stuff that never gets said out loud. Because once you understand the game, you stop being the product. And now that you know what's happening underneath, we keep rolling forward, because the next gear is where things get even clearer. Now let's dig into the news that people should be talking about, but aren't. Because what you see in headlines is not the whole story. What you don't see is what's driving the next leg. First, the state of Texas just jumped in and bought roughly $5 million worth of a Bitcoin spot ETF. Make no mistake, this is not some small retail move. A U.S. state putting capital into Bitcoin is a declaration. It says, we believe in Bitcoin. We believe it belongs in strategic reserves. And when states do this, it shifts how institutions think about it. Second, in the AI arena, the company Anthropic launched its new model, Claude Opus 4.5. This isn't minor. This model outperforms human engineers in coding tasks. It's cheaper, it's faster, it's smarter. And guess what? Every dollar that goes into AI infrastructure, every chip that gets purchased, every server farm that gets built, that's money leaving old school finance and flooding into new rails, crypto benefits, not later now. Third, combine those two, government stepping into Bitcoin, AI ramping up infrastructure like a rocket, and you've got a full-on shift in how money moves. This is not about price pumps. This is about allocation, structure, positioning. Let's break this down so it's crystal. When Texas buys Bitcoin, they're not buying because they expect a 100 times return next month. They're buying because they expect Bitcoin to outperform cash, underperforming fiat, underperforming bonds, and being part of how reserves are built going forward. And when Anthropic drops a model that can outcode humans, that means two things. One, cost of production goes down. Two, capability goes up. That means companies need new infrastructure. That means chains built for scale, trust, and speed get a nod. It means crypto isn't side bets anymore. It starts looking like function, and function gets scale. So here's what the normal headlines don't tell you. The price might look flat. The charts might look sideways, but under the surface, the institutions are repositioning. The governments are stepping in, the infrastructure is being upgraded, and the market's greatest moves almost always happen when everyone thinks it's quiet. Tonight, the news isn't about tomorrow. It's about what the rest of the year looks like. And when you connect the dots, state reserves buying Bitcoin plus AI infrastructure exploding plus low headline volatility, you start to see how this market might move when it decides to move. And we're getting close. Here's the part of the show where I stop dancing around it and just tell you what's really going on with the bigger picture. The stuff that drives every chart, whether people understand it or not. The macro environment right now is a complete contradiction, and that's exactly why things feel so tense. On one hand, you've got inflation cooling. You've got the Fed openly hinting at rate cuts. You've got bond volatility dropping. You've got the dollar losing strength. Normally, that's the recipe for a full-on risk asset rally. Crypto should already be running. But on the other hand, the world is dealing with problems no one wants to talk about. Commercial real estate is cracking. Banks are covering it up. Countries are hiding debt they can't service. Supply chains are still fragile. Energy markets are one headline away from going vertical again. and governments are quietly preparing for scenarios they won't admit publicly. That's why the market feels weird. Half the signals scream green light, wherein half the system is still sweating bullets. Investors don't know whether to attack or protect. So what do? They freeze. They sit on their hands, they wait for clarity, and that's why Bitcoin isn't moving like it should. That's why Ethereum feels sluggish. That's why Solana looks strong but hasn't broken out clean. The macro is telling everyone, hold on, something big is coming, but not yet. And here's the truth most people don't understand. The markets don't move because of CPI prints. The markets don't move because of FOMC speeches. The markets don't move because some journalist wrote a headline. The markets move when the entire foundation underneath them shifts. And that shift is already happening right now. You're watching governments adjust reserve strategies. You're watching global liquidity quietly loosen. You're watching capital rotate into harder assets. You're watching the real economy soften. You're watching digital rails being tested at a speed that would have been impossible 5 years ago. The macro isn't bearish. The macro isn't bullish. The macro is restructuring. It's tearing down the old system and building the next one while pretending everything is normal. And if you really want to understand what's powering that shift, if you really want to know why the markets feel like they're holding their breath, you have to look at the one force that's doing more damage and more transformation than anything else right now. Because the biggest threat to the old financial system and the biggest accelerator for the new digital economy isn't Bitcoin, isn't policy, isn't rates, isn't liquidity. It's something much bigger. Now, let me tell you about AI. While all this market noise has been going on, while people are staring at charts and pretending they understand the game, something far more important has been happening behind the scenes. And I'm going to break it down in plain English, because if you don't understand what AI is doing right now, you're already behind. Anthropic dropped Claude 4.5, and let me tell you what that actually means. This thing isn't a chatbot. It's not a toy. It's not here to help. It's an engineered machine that can outthink, outplan, and out-execute entire teams of real people. It reads huge code bases, rewrites them, finds bugs, fixes the bugs, and builds new structures faster than most developers with degrees. And here's the cruel part. They made it cheaper, faster, smarter, cheaper. That combination is the economic equivalent of a nuke. That's how industries collapse. And it wasn't just one tool. They upgraded Claude Code, Claude for Excel, Claude for Chrome, the entire development platform. So now instead of one AI giving you answers, you've got an entire AI workforce ready to replace half the tasks people get paid to do. Not next decade, now, today. OpenAI dropped their new shopping agent. People laughed at it. Oh, it helps you buy laptops. No, that thing is learning how to make decisions for you. It searches the entire internet, compares prices, reads every review, checks performance specs, filters scams, and hands you the top choice in seconds. That used to be a job. It used to take humans hours. Now it takes a machine 3 seconds. That's not convenience, that's displacement. Then Google absolutely detonated the conversation. Their Nano Banana Pro model can literally copy your handwriting perfectly. Same slant, same pressure, same imperfections. You upload a handwriting sample, and the AI can basically impersonate you on paper. Do you understand the scale of that? That breaks schools. That breaks signature authentication. That breaks document verification. That breaks trust. That's a technology that should terrify you, because we have no defenses for it yet. And while all that's happening, Harvard is dropping medical models that diagnose rare genetic diseases better than the best doctors on earth. Not in days, not in hours, in seconds. Think about that. AI is now stepping into medicine, not as an assistant, but as the expert. This is bigger than any tech upgrade we've ever seen. This changes health, insurance, policy, everything. And to top it off, a robotics safety director filed a lawsuit saying one of their humanoid robots malfunctioned so badly it carved a gash into a steel refrigerator door. This isn't science fiction. This isn't Hollywood. This is where the technology is today. Machines stronger than humans operating systems, more complex than humans, can monitor, and we're pretending everything's fine. So let me say this clearly. AI is not a trend. It's not playful. It's not optional. It's a force that will eat tasks, workflows, jobs, and entire industries. It doesn't get tired. It doesn't complain. It doesn't need validation. It works all day, every day, without emotion, without hesitation, without mistakes. And every company on the planet is looking at this and realizing they can replace teams of people with one machine that costs less than one salary. That's the reality nobody wants to face. And here's where it connects directly to crypto. AI cannot operate at human speed. It cannot wait 3 days for a bank transfer. It cannot wait for approvals, signatures, business hours, or outdated rails. AI needs instant settlement. It needs programmable money. It needs smart contracts. It needs decentralized verification. It needs digital rails that operate 24/7, just like it does. AI is the pressure. Crypto is the release valve. One forces the other. And once you understand that, you understand why the next market cycle won't look anything like the last one. The old world isn't ready. The new world is already here. And most people have no idea they're standing in the middle of it. After all the chaos today, he needed a reset, just a moment to step back from the charts and sharpen the mind. So he drove out to Talking Stick, close to home, far enough away that nobody bothers you, and real enough to remind you what people look like when they're fighting their own battles. That place has energy, hope on one side, crushed dreams on the other. Exactly the kind of place that keeps you grounded before you step back into the digital war zone. He didn't stay long, didn't need to, just enough to remember the truth. The trenches don't reward emotion, they reward clarity. And once his head was clear, he went back in. He loaded up the setup for the night, 50 sol. No fear, no hesitation, but no stupidity either. You don't go into the trenches reckless, you go in calculated. First thing he did was fire up the tools. Bull X for flow, Neo for structure, Deck Screener for confirmation, 3 weapons, 3 angles, 3 ways to see what everybody else misses. Bull X showed the heat where wallets were actually moving, not the noise, not the hype, not what people were saying, but what they were doing. Neo showed how the patterns were forming, whether a move was building strength or faking it. And Deck Screener told the truth about liquidity, who was actually buying, who was bluffing, and who was setting traps. From there, the strategy was simple. Don't force anything. Don't chase anything. Let the market reveal the plays, then strike fast and get out faster. His first play was a small, controlled scalp, testing the waters, reading the flow, timing the micro breakouts. Quick in, quick out, 4 SOL locked, no greed. Second play was the mid-tier rotation, a zombie survivor waking up, volume rising, liquidity building, order flow clean. He hit it before retail even noticed, secured another 6 to 8 SOL without breaking a sweat. Then came the big one, the trench play that made the night. A low-cap Solana meme sitting in that perfect zone, momentum rising, wallets clustering, liquidity forming, and every indicator on his toolkit flashing the same message: someone knows something. That's the kind of signal you don't chase. You stalk it. He waited for confirmation. A real volume spike, a clean break, holders stacking, the chart tightening like a spring. Then he stepped in with conviction, rode the breakout, exited before the liquidity trap slammed shut. That alone pushed his total into the mid-70s. 50 SOL turned into 75 tonight. Not because of luck, not because of hype, because he treated the trenches like a battlefield, not a casino. His strategy was simple: read the flow, respect liquidity, stay disciplined, avoid the greed trap, strike only when all 3 tools lined up and the chart confirmed the play. Most people lose money in the trenches because they act like tourists. Triple X survives because he moves like a professional. He knows when to attack, when to observe, and when to disappear. That's how you turn 50 sol into 75 in a single night, not by being lucky, but by being smarter, calmer, sharper, and more disciplined than everyone else in the room. All right, let's get into Lulu's read for the night. And if you're new here, yes, the head of TA in this garage is a pig, 4 hoofs, a tail, and somehow better at reading charts than half the influencers online. So let's break down exactly what she saw across Bitcoin, Ethereum, and Solana. And I'm going to make this simple enough that anybody can follow it. Starting with Bitcoin, the 1-minute chart was sliding under the short-term moving averages. RSI wasn't crashing, which told Lulu this wasn't panic. It was controlled selling. So here's the translation. If Bitcoin gets back above 87,600 on the 1 minute, we bounce toward 87,900. If it slips under 87,300, we're heading straight into 87 flat. On the 15-minute, Bitcoin was stuck under the EMA cluster. That's a downtrend. RSI was in the low band, meaning the bounce comes from structure, not emotion. So here's the simple rule. Hold 87,450 on the 15-minute, and the next stop is 88,000. Lose 87,200, and the rug pulls into 86,700. And the 1 hour? Bitcoin is coiling, stuck between moving averages, waiting for direction. Close an hour above 88,200, and you open the road to 89,000. Break below 87,000, and 86,200 becomes the next stop. That's it. Clean, simple, understandable. Ethereum looked heavier. On the 1 minute, ETH was stuck under the fast EMAs with a tired RSI. That usually means the next move needs a trigger. If ETH pops back above 2,943, you get a bounce into 2960, lose 2930, and we're sliding to 2905. 15-minute ETH showed lower lows forming. The sellers still had control. Hold 2936, and it can reclaim the range. Fall under 2930, and 2900 becomes the magnet. And the 1 hour chart for ETH told the whole story. It's under the 200 MA. You don't run when you're under the 200. If ETH closes above 2965, trend flips. Close under 2925, and we're visiting 2880 next. Now, Solana, Sol looked the cleanest of the three. On the 1 minute, it was coiling right against the fast-moving averages. That's the calm before a break. Above 139, you target 145. Below 138.40, you target 137.60. 15-minute Solana was underneath the EMA cloud, but not rejecting, which means buyers were tired, but still alive. Reclaim 139.20, and we tap 140. Lose 138.20, and we head toward 137. On the 1 hour, Solana was sitting right in the middle of the channel, the decision zone, close above 139.50. And 142 opens instantly, close under 137.80, and you're looking at 135.50. Now for Lulu's plays of the night, these hit beautifully. Play 1, Bitcoin. BTC tapped 87,300, RSI curled up, and price reclaimed the 9-period moving average on the 1 minute. That's a micro reversal signal she never ignores. Quick scalp, clean win. Play 2, Ethereum. ETH broke out of its tiny falling wedge on the 15-minute right when RSI reset and volume ticked green. She caught the reclaim and rode it straight into the moving average cluster. Play 3, Solana. Sol tapped the lower band, held 138.20 perfectly. RSI bottomed, and the next candle reclaimed the EMA cloud. Textbook bounce. She nailed it. And look, none of this is financial advice. Our head of TA is literally a pig. If you're taking financial advice from a pig with 4 hoofs and a tail, that is entirely on you. So make sure you smash that like, hit follow, and share this with your fellow Degens and that one buddy at work who still thinks Bitcoin is a scam. See you tomorrow. Let it rip.